Hello and welcome to my channel. Today is August 23rd, 2020, and I'm going to reveal my Roth IRA growth portfolio account. And my goal is to build this so that by the time I retire, it has about $1 million in it. And I will show you what I'm going to do. I'm going to make some significant changes to my portfolio today, and in the process you will also learn about M1 Finance, where my portfolio exists, and how to make changes to the pies. And I will also tell you why I'm making some of these changes. So as my portfolio sits now, I have about 34% allocation in tech stocks, which are basically growth oriented. Then I have about 23 in core stocks, and I'll go into each one of those holdings. And then 23% are allocated to dividend stocks. Then I have about 10% in precious metals, 5% in silver, and 5% in gold. And these are ultra silver and ultra gold, so they track the underlying ETF 2 times. And then I have a 10% allocations to equal weighted allocations to ARK ETF investments, and we'll go over those as well. So in tech, what I have is about 9% allocation on Apple and Tesla, and 7% allocation on Microsoft, Amazon, Shopify, and then 5% Nvidia, Etsy, Google, Adobe, Facebook, and then another Squares has 5%, Zoom, DocuSign has 5%, and then some smaller allocations to Netflix, Fastly, CrowdStrike, Spotify, TDoc has about 4% allocation. And Zoom, I've already discussed. PayPal and AMD has about 3 and 4% allocations, and Okta has 2% allocation. So this basically is my tech focused portfolio. In my core account, I have Costco, Home Depot, wheat and precious metal, gold, and Clorox. Each one of those has 6% allocation. Then I have Nike, Thermo Fisher, Old Dominion Freight, Walmart, Johnson & Johnson, Procter & Gamble, Dollar General, Target, and Xterra Energy, Disney, Equix has 5% allocation, and then 4% the rest of them, which has Danaher, FactSet, West Pharmaceutical, and 3% on Eli Lilly. Then I have dividend portfolio, where these are the stocks that are high dividend paying stocks. So I have B&G Foods, Caterpillar, Apollo Global, Broadcom, Blackstone, MPLX, and Antero Midstream, UPS, Taiwan Semiconductor, Chevron, 3M, Verizon, PepsiCo, Coca-Cola, AT&T, Kimberly-Clark, O Realty Income, Crown Castle, Prologis, ABY, Holy Energy, Main Street, Digital Realty, and Dynex Capital, Gladstone, and Brookfield. And weight on each allocation is mostly 4%, except some of the risky stocks I've put, and high dividend paying stocks I've put 3% allocation. Then I have 10% in precious metals and 10% in ARK ETFs. These ARK ETFs are basically, I came to know about these about 2 months ago when I was researching, and I found these very interesting because some of the companies I wanted to buy already are tracking in these ETFs. So I thought that I wanted to give these ETFs a shot, and I'm going to, so what I'm going to do now is I'm thinking that I'm going to, because this is a growth portfolio and I want to grow my investments manifolds to get to my target, which is in 20 years about 1 million. For that, I need to grow my investments to about 16-17% every year. And that doesn't mean that I won't be able to lose if I go high risk, but then I'm ready to take the risk, and I'm going to look for a higher risk, higher return type of investment, because I'm going to put my money every week or a couple of times a week into this portfolio. So even if I'm losing money, they're gonna dollar cost average, and in the long run, I'm thinking I'm going to make a significant return on this portfolio. So having said that, the way M1 Finance works is each of these you can make your own pies, and then within each pie you can allocate the weight on the stocks, and then you can make a pie of the pies basically, and make the allocations of the pies. So what I'm gonna do is, because I want to increase my weight on tech, I'm going to go to my pies, and my major pie is my portfolio pie, which has allocations to 34% tech, 23% core, 23% dividend. What I'm going to do is I'm going to make my tech 50% and my core 10%. Actually, let's make it 15%. My dividends 10%. So I have about 95%. And then I'm going to increase my ARK, K, and all of these by 1%, because these are high growth investments too. So that makes up 100% allocation. So now I've made my changes. One other change I would like to make is in my core. Actually, let's leave it for the timing. So right now, so I have made my allocation. So now you see that my pie under my investments is not balanced because I have made my changes. So I have underweight on tech, and I have overweight on core, and way overweight on dividends. So what I'm going to do now is I'm going to say manage pie and rebalance and confirm. So next trading window, which is tomorrow at 9:30, it's going to automatically allocate my funds based on my target allocations. So if I go into the details, what it's going to do is, based on my weight, it's going to have these buys. So I have 143 dollars are going to T-Dog, and then this is how much allocations that they're calculating to go to buy these funds. So DocuSign, Zoom, Square, Tesla, Apple, ARK ETFs, AMD, and then some other ARK ETFs, Shopify. So most of these are my tech stocks, growth stocks that they're allocating, and what they're selling is my energy stocks, my high dividend stocks, some of my core holdings. So because I've reduced my weight on those, and this will happen tomorrow on Monday at morning at 9:30 a.m. So let's see how this portfolio performs. I'm going to come back and review this with you guys sometime next week. And I have other portfolios as well, which I'm going to review in these series of videos. I have a Fidelity account, which is my IRA account. So this was my Roth IRA account. I have another regular account for my wife on this M1 Finance. And then I have a 401k account. So I'm going to reveal those accounts and how my investment strategies on those are, and what changes I've been making. But major series, this video will be catering towards my Roth IRA growth portfolio, which is this one. So far, if you see, I have been growing this. I started on investment back in April 23rd, and in 4 months I have about 26% or close to that growth in it. And even though I have not been highly focused on tech during this time, yet my performance has been increasing. So I want to put some more focus on tech stocks with the way the market is trending right now. I'm expecting tech would go down. Actually, I'm hoping the tech sector would go down by 20-30%, so I can start putting some more money into this portfolio when that happens. Okay, so that's all for today, and we'll see you soon. Have a nice day.